that to you. But in the meantime, we want to focus on some of these key economic headlines, including in the wake of the agreement struck in Geneva just over the weekend between the United States and China. This is what we know. The United States will reduce tariffs on goods from China to 30%. That's down from 145%. China, in return, is reducing tariffs on U.S. goods to 10%. That is down from 125% here. So a lot of movement on the tariff question between the U.S. and China. Both countries are also enacting these reductions for a period of 90 days. In the meantime, here our colleague, Fox News' Caroline Shively, with more details. Let's listen.
The U.S. and China have cut a 90-day deal to slash tariffs, a temporary truce in a trade war that has already hit U.S. ports and threatens to tip the global economy into a recession.
I think it's going to be fantastic for China. I think it's going to be fantastic for us.
The U.S. agreed to drop the 145% tax on Chinese imports to 30%, and China dropped from 125 to 10%. The market soared on the news Monday as the two sides continue negotiations. Administration officials say they'll use the 3-month pause to rebalance trade. Last year, the U.S. bought $295 billion more from China than China bought from the U.S.
We want more balanced trade, and I think that both sides are committed to achieving that. We would like to see China open to more U.S. goods.
Some analysts say it's too early to call it a win.
If you look at what Trump is doing, he's blinking. He's stepping things down and claiming victories.
This follows a deal Trump made with the United Kingdom last week. But the overall 10% tariff on imports remains in place for U.S. trading partners, including the U.K., with higher reciprocal tariffs on a number of countries and industries.
They have assessed 10% to 25% tariffs on our allies, the very people that we would need, our friends and allies, in order to deal with China. So to me, they've been approaching this all upside down.
If an agreement isn't reached, the higher tariffs will return in mid-August. In Washington, Caroline Shively, Fox News.
Caroline, thanks so much. In the meantime here, we want to bring into the conversation our friend there at the American Institute for Economic Research, Dr. Peter Earle. He joins me. Peter, good to see you, as always, here. I guess first up, though, I got to ask, were you surprised that this came together so quickly in the span of a weekend between the U.S. and China? A lot of people, you and I had discussed this even, thought this was a really intractable issue. You know, for weeks, so many reporters were asking Trump White House officials, what's the state of the progress of talks with China? And they were quite mum about it. And then all of a sudden, the parties are meeting in Geneva and there's a trade deal announced. Were you surprised?
Yes, but even the most intractable deal is made more tractable by necessity, right? I mean, you know, both sides are watching their financial markets sort of spiral. They're watching prices change rapidly. So, I mean, it was necessary to get something down. You know, as was shown in the previous segment, you know, the U.S. and China agreed to a 90-day truce. We cut our tariffs from 145% to 30%. They cut theirs from 125 to 10. They also suspended their export controls on rare earths. And so, I mean, you know, this is a good basis for moving forward. At least it's some certainty that the market desperately wanted. But I mean, it's important to note that, I mean, you know, we've seen these things move around before, and this reprieve is temporary. Duties on steel and autos, the fentanyl-linked goods tariffs are all still in place, and you know, it's going to be difficult to balance trade in a way that, you know, sees our trade deficit go to at least a 50-50 surplus or something. So I think there's still a lot to do, but this is what the market was looking for. This is the certainty that, you know, we need to move forward.
Could you make the argument that the tariffs levied on, you know, each country now are just back to where we were before April the 2nd? Can you make that argument?
Yeah, I mean, in fact, I've seen the argument that that you know, you take trading relationships, you put tariffs on, and then you remove them partially on some countries, and then, you know, you claim that that's success. I don't think that's really accurate, part of what's happening. I do think that to some extent the tariffs are being used as leverage, but I mean, certainly there are people who are going to wonder why this was suddenly such a pressing issue. I know Mr. Trump has described that as something that's irked him for years, but yeah, I mean, I think the question now is the U.S. and China have a huge, interdependent trading relationship, and it probably requires us to work together more. And so there probably are some extractable sort of concessions on both sides. But I mean, China, they don't want to be seen as being pushed around. Their economy is not as strong as they always, represented to be. So this is, we're tied to China no matter what. So this was important to come to some sort of a concession.
So, Peter, you know that President Trump likes to speak in terms of winners and losers. And that is the global economy. There are winners and losers.
Right. Mm-hmm.
Who is the winner here and who is the loser? Because I've seen a lot of critics of the Trump administration essentially say President Trump caved to China on this. Do you agree with that assessment?
Yeah, I don't get that. From what I see, I don't get that he caved. I mean, certainly, people might have wanted him to keep tariffs at a very high level or something like that. But I mean, that doesn't help anybody. And I have to say, historically, our tariffs to China have been about 1.5%, something like that. More recently, they rose to maybe 3%. At 30%, which is where they are now, that's an astoundingly higher rate. I don't think people understand that the difference between 30 and 145 is tremendous, but 30 is still a tremendous number that we will probably feel if no deal is arrived at. So, I mean, these are still kind of alarming numbers if you compare with what we had before.
Okay. That was my next question. How is the U.S. business community responding? The U.S. Chamber of Commerce put out a statement in relation. They say this: while any agreement that reduces tariffs is good news, they say it's important to know that even with this China agreement, tariffs are much higher overall than they were at the beginning of the year, they say. And many businesses, especially small businesses, are dealing with growing costs and disruptions. So are businesses breathing a sigh of relief after this weekend or not?
No, I think they're holding their breaths and seeing exactly how this winds up coming down the pipe. Because I mean, even at 30%, the World Trade Organization did a study that said that this could reduce trade by as much as 70% in the medium term. That's tremendous. And I mean, we still have very high levels of tariffs. For when we had the stock market sell off in early April, while the regular stocks sold off maybe 5-10%, ultimately they were down 15%, but they bounced from that. The small caps, which are those small companies, they're not quite small business in the way we define it, but the much smaller companies, they sold off much more, maybe something like 23%, because those are going to be the businesses that are going to be less able to deal with higher tariffs and higher costs. And there's still a question of whether and to what extent this feeds through into inflation. So, 30% is a lot less than 145%, but it's nowhere near 1.5 to 3 or 4%.
But it did seem like the market today was breathing a sigh of relief.
Yes.
This is how it closed. Look at that. Upwards of what? Almost 1,200 there, Peter.
Yep.
So that's a good sign, right?
Well, what's interesting is that equity markets, so the S&P and the Dow, they were up almost 3%. But the bond market, I'm not going to say anything about the different people who trade in bonds and stocks, but the bond market was much more skeptical. We saw yields rise, which could be interpreted as a sign that either the bond market thinks that these tariff levels at 30% are going to push prices up, or they just want more information because we've got a lot of different things coming in the next coming months. We have a budget deal and all those sorts of things, and how they all interact is going to affect how the U.S. is able to finance its goings on. So while stocks had a party, bonds did not participate. Bonds were watching very suspiciously from the sidelines.
So I want to read from the Wall Street Journal because I think it's interesting to talk about some of the key stakeholders. We're about to hear from Jameson Greer and Scott Besson earlier today in Switzerland. The Journal says this in their piece: there's more to Monday's soaring stocks than the pause in crushing China tariffs. They say the temporary lifting of triple-digit trade levies between China and the U.S. while trade talks get underway removes the threat of an immediate stagflationary hit to the economy. They say this is very good news. They also say this, but an even better reason for such a big bounce in the market is that it looks like Treasury Secretary Scott Besson is now in control of trade policy. The Journal says this, put simply, the grown-ups are in the room. What do they mean by that?
Well, there was a view that, Besson being the Treasury Secretary, he has sort of a higher mandate, a more all-encompassing mandate than, say, Commerce and some of the other folks. Also we've had some of the trade advisors like Lighthizer and I'm blanking on one of the names. Some of those
Navarro.
fellows. Yes, Navarro, thank you. Some of those fellows, they seem to be single-minded in terms of trade policy and that sort of thing. But Bessent has a lot of things to take into account. He has to take into account, again, the fiscal picture, how we sell bonds, what price we're selling bonds at, things like the upcoming budget deal, deficits, the tax deal, all that sort of thing. So it's viewed that he might be a little more pragmatic than some of the other advisors who are kind of single-minded, whether it's commerce or trade or whatever else. So I think that's what's meant by that.
How is everyone supposed to read President Trump's thinking in this? And I don't want to psychoanalyze him, but if there's another 90-day pause with China, which is another kind of global economic superpower, second to the United States, what does that say about Trump's philosophy vis-a-vis tariffs? That, I know he's very transactional in nature, but the fact that, he is abiding by 90-day pauses to figure out more, to kind of iron out the wrinkles in all of these things, does it show that when it comes to tariffs, he is flexible?
I mean, you start off the question by asking, how do I read it? I think it's been made very clear that Trump does not want to be read and does his best not to be, because he changes his mind very frequently. He'll sometimes announce things on Twitter. I guess it's actually Truth Social. So, that sort of thing. I think by bringing into effect this 90-day pause, what he's saying is we're getting closer, but there's still some things we need to hammer out. And he's also buying time for businesses, those which can, to make the adjustments they might need to if he needs to go, if he needs to put us in a 30-day period or whatever, or he wants to put us in a 30-day period where those full force tariffs take effect. Because, we still haven't seen them in effect yet. We may tomorrow with CPI see some of the initial price increases as businesses order in advance and push up the prices of certain goods. But I think, he's buying time for people to get ready. And if he needs to, and he puts in place, a 30-day period where we actually see those tariffs realized, I think it could be devastating. And he probably doesn't want to do that, but he will if he has to. That kind of thing.
Okay.
I think that's yeah.
All right, Peter, we're going to leave it at that. Always appreciate your insight. We'll talk soon.
Thank you. Have a good night.